We have the rand trading around 7.12, 7.13 at this stage. So it really has been drifting sideways for the past couple of sessions.
Morning, Stephen. Yes, you're right. I mean, yesterday was a public holiday in Japan, and there was very little out data-wise. And I think basically markets were waiting on today's FOMC as well as UK budget data. So there's very little direction yesterday, and we saw the rand just sort of move around in that 7.11 to 7.13 sort of range.
Just looking at that UK budget that's out today, what's the market going to be looking for there specifically?
Well, Stephen, the budget deficit actually came in better than expected in July, so these numbers will be for August. And I think markets will be looking for whether the government remains on track to reduce the deficit and generally what the state of the UK's public sector borrowing requirement is. As you know, they're battling with a massive deficit, and that had actually put the pound under pressure a few months back. So I think the markets will be looking for any sign of improvement or even deterioration in the UK's fiscal position.
Of course, the FOMC, the big one to look for this evening, and it's also expected that the Fed might downgrade growth forecasts for the US for this year. What are you expecting on that front?
Well, Stephen, we don't anticipate any change to the Fed's current monetary policy stance. We think rates are going to stay on hold, and we don't think that they're going to expand their quantitative easing program, although there is speculation mounting that they could do it now or even in January.
And what sort of reaction would we get from the currency markets to that quantitative easing if it's not announced this evening?
Oh, well, I mean, as always, the tone of the Fed's statement that's released after the FOMC is always going to be important. So if they downgrade forecast and they generally have a very bearish view, we can expect the dollar to come under pressure. But if that outlook also spooks investors, we could see a spike in risk aversion again, and we could also see the rand then weakening even against a weakening dollar. But if, on the other hand, we have a relatively upbeat assessment from the Fed and they still believe that growth in the US can come in line with their original expectations or forecasts, then we could see a further boost or rush of optimism, and that could buoy risky assets such as the rand.
Of course, we had very little reaction from the rand to that ANC policy meeting that got underway yesterday. Tomorrow, though, we're getting the quarterly bulletin out, and we also have retail sales. Will these be key for the rand tomorrow?
I think so, Stephen. I mean, today the rand's direction is largely going to be dictated by international developments, but I think tomorrow it's definitely going to take its cue more from domestic developments. It was interesting that it didn't seem to react all that much, as you said, to the ANC's NGC Council, because certainly the comments that came out of the Council were everything that investors would be hoping to hear. Mine nationalization seems to have been shifted off the agenda. Minister Gordhan emphasized that South Africa needs a higher growth path, and President Zuma then reiterated that government is in fact looking for ways to boost South Africa's growth and make that growth more labor absorbing. So these were all positive sentiments coming out of the conference, and you definitely have expected the rand to strengthen on the back of that, but it may be because people were more focused on the FOMC. And then with regards to the local data, we're not expecting fireworks from retail sales as mentioned earlier. We're expecting them to moderate as the effect of the World Cup spending dissipates from the data. But I think the rand is far more likely to take direction tomorrow from the current account data. And we're expecting a narrowing in the current account data in line with slowing economic momentum in quarter two. So we think that there's definitely upside potential tomorrow.